Oh, I hope you guys doing fine. I hope you're doing wonderful. This is a presentation, the a bullish case for gold, and I'm going to start with the euro at first. So the euro today had a beautiful comeback, and form an almost a one white soldier. No, not a one white. This is like a real piercing. It's not a bearish bullish engulfing, but it's definitely a rejection came from a Bollinger Band and pierced into the previous body and the previous trading range, which could be classified as bull trap, which is a beautiful thing. Good. So this thing came with a consistent bullish bullish divergence with the RSI, with the stochastic, with the MACD histogram, with the MACD itself. And this thing worked in the past 100%, at least produced a bounce back. And it worked in the past to have a change of a trend. So the success rate of this, as I said yesterday in my LinkedIn account, it was 100%. And now we have a beautiful bullish candle. And it worked here as a negative divergence with the price action, and the rest is history. It worked here as a negative divergence, and the worst is history. It worked here as a positive divergence, and the rest is history, and so on and so forth. We don't know the future. We just play with the patterns and hope for the best. So another thing that is very bullish today is it bounced from the lower end of the Bollinger Band, which emphasize in a mean reversion trade to the at least 20-day moving average. In the past, it produced a bounce, a major one. In the future, we don't know. We just play by the rules. Let's look at the DXY. Good. Same thing will happen with the DXY. It had the same patterns of negative, positive divergences and playing with the Bollinger Band. And today it settled at this, I think it's 44 something, and this inside of the trading range of this year high. So today was a year, all time, the 21, like 8 months high, and this is classified so far as a bull trap. A bull trap, but we don't know the future. But we play by their rules. If you look at UUP, which is the ETF for the DXY, we did not have a breakout yesterday. It was still in the trading range of today. So May 30th of May 2021, the high was 25.15. Okay, here 19th of August, the high was 25.15. So it's the same. So today you made a new high and you retraced, and you made a bearish harami at the top, at the higher end of the Bollinger Band, which is never ever a bullish thing. We don't know the future. We just play by the rules. And as I wrote in my LinkedIn account yesterday about the relationship between TLT and DXY, it is not negatively. It's not perfectly. Does not have a perfect negative correlation, yet they confirm each other during inflection points. So when the dollar was making a 2021 high, TLT was going down, which this is against the very meaning of higher yield, higher dollar, lower yield, lower dollar. So the yield were going high, the dollar was going down. So what happened? This was a beautiful indicator that the dollar was bottoming at that time right here. Okay? And same thing here too. You have a 8 months high. Yeah, TLT is rallying above its 50-day moving average and 200-day moving average. So this called the dollar bluff. That's how we do in correlation trade. We try to do things and hope for the best. And we don't know the future, but at least we are very confident in our analysis. Good deal. So I talked about the euro. I talked about DXY. I talked about UUP. I talked about TLT and its relationship with the dollar. Let me talk about GLD. I tweeted some times ago, how can you trade GDX is when the dollar go up and GDX does not move. That shows resilience in GDX, and this time I believe that resilience is resembled in gold. So gold is not blinking. Gold is not blinking while the dollar was breaking out. So that's a very major sign of bottoming. Call it conspiracy theory. Just do whatever you want. Think the whole world is conspiring against you. But if you don't play by the rules, you're gonna be caught. You're gonna be hurt. So, GLD or gold were very and is still very resilient against the dollar advance, with upsloping 10-day moving average and a beautiful bullish MACD. Good deal. Let me talk about Bear Gold, which is one of the biggest gold miners in the world. And today, all of the gold miners most of the gold miners were in the red yet. This bad boy is advancing with beautiful bullish divergence, as we talked about in euro. And also this is true with gold miners too. So you have bullish divergence between the RSI and the price action, and in many things, including the histograms, MACD histograms, and MACD itself. Did this work in the past? You can be the judge of that. The answer is yes. Okay, you could look at it on your own time. It is applicable, same as the euro with Bear Gold. So if gold miners are to collapse, Bear Gold should go down severely, yet it did not, and it gave us a beautiful rejection, which is even better than a hammer. It was a beautiful bona fide. Think this is definitely a bullish Rami and a bullish not piercing, thrusting, but it's still beautiful, even though thrusting is not as good as piercing, but it's still beautiful. And it came with beautiful place where the buyers gathered, and also it is at the lower end of the Bollinger Band. Let's look at the Bollinger Band. Put it up. Yes, sir. And as John Bollinger always says, if the price action closes inside the Bollinger Band, that is a beautiful indicator of a mean reversion trade. Is that true in all these things? Yes. UUP, it closed inside, which is a beautiful bearish Rami that closed inside the Bollinger Band after being trapped outside. So that increases the chances of mean reversion to the 20-day moving average. So you have here May 4th, 5th, 6th, or 8th, 2021. You have beautiful breakout, yet you closed inside the Bollinger Band and you tested the 20-day moving average here, and the same is here, and so on and so forth. You could do it on your own time. So that is why I'm very confident on this trade. Let's look at Newmont. Newmont, as I stated in LinkedIn yesterday, it is forming a beautiful uh, bullish wedge. That's most of the times is a very bullish pattern. Second, it is at the lower end of the Bollinger Band, and this is very obvious. You could look at it on time. Sorry, the Bollinger Band is not clear. It's in the gold right here, as in gold, and it formed a beautiful inverted hammer that came after consecutive red candles. Bullish hammer that comes after consecutive red candles are always, most of the times, very bullish. Okay, and what else? It formed, it found buyers at the lower end of the Bollinger Band, at the lower end of the trend line of the bullish wedge, and also two multiple measured moves. The one in the red, ABC, it is 262 Fibonacci extension of this point to this point. Usually these type of Fibonacci extensions are terminal. 220, 262 in the past will produce volatility and may produce a change of trend that you could look it up on your own time. I am confident on this number. And in the green, ABC, it's the recent breakdown from here to here to here, and it produced 162 Fibonacci extension, which is terminal in the short term. This is terminal ABC in the longer term. So do we believe in this stuff? They call it the golden ratio. You could look it up on your own time. Conclusion, let me recap. Bullish action in the biggest gold miner in the world, Newmont, and I stated that earlier. Bullish action in the second biggest gold miners in the world with bullish divergences. By the way, Newmont has the same bullish divergences too. Barrick Gold, and I stated that, and also bullish resilience in gold. And as I said, tweeted before, how you trade GDX perfectly is when GDX stares the dollar in the eye and does not collapse, and gold did it this time instead of GDX. TLT, and I talked about the relationship with higher yields, higher dollar, and vice versa. And the higher the TLT gets, the lower the yield gets, and it stared the dollar in the eye. You could look on your own time about the relationship of TLT and dollar, and at inflection points they must confirm each other. I do nothing in the world except analyzing charts. I work for hours and hours and hours and hours in my life just looking at charts, and I came up with this relationship that I've never heard before anybody talk about. So I am confident about that 100% in my mind. And I talked about the UUP, that it did not make a breakout yesterday. It made the breakout today, and it retraced. And this is should be and could be, and no one knows the future, but it could be a bull trap. And according to Joel Bollinger Band, when you close inside the Bollinger Band, that increases the chance of mean reversion. I talked about DXY. I talked about the EURUSD. Please like if you like, share and subscribe, and do remember that disco is forever.